Hey everybody, it's John King with Summit Funding, and I wanted to give you a quick update on the market and kind of what's going on this week and what's been happening really since the beginning of the year, and talk a little bit about trends and what does it mean when a trend isn't really a trend. So first of all, when it comes to market rates, it's been a volatile first month and a half of the year. So what we're seeing is we're seeing Treasury rates moving up quite a bit, and the trend has actually been pretty consistent since August. Normally, when the 10-year Treasury rates go up, you're going to see mortgage rates go up. But the truth is, what we saw last spring in March and April of last year was Treasury rates plummeted and mortgage rates didn't. So I was saying for a while last year that, hey, rates are a lot higher than where they should be. Well, the hope was that mortgage rates were going to go down in order to catch up with how far Treasury rates had dropped. The truth of what's happening is mortgage rates are staying about where they have been, and we're seeing Treasury rates creep up. The problem is sooner or later, those Treasury rates are going to start pushing mortgage rates higher. So we've got an interesting spring ahead of us when it comes to interest rates. A lot of what we're seeing is driven by concerns about the market recovery, specifically related to COVID. So the markets are reacting to COVID case counts and vaccine rates and news about vaccines. So we're going to see a lot more volatility, but what we are right now is we're on a bit of an upswing. So rates definitely are having upward pressure. We had the same upward pressure at the beginning of January when we had the volatility with the actual political environment, specifically when we're talking about the runoff in Georgia and the fact that the Democrats basically have control now of the House and the Senate. That caused interest rates to come back up. Late January, rates started settling back down some. Same thing's happening right now. Early February, we're seeing rates go back up. I don't know if we're going to see that come back down or not. What I don't think we're going to see a huge shift in rates higher. And a big part of that has to do with lender margins. Mortgage companies have some room that they didn't lower rates because they couldn't afford to entice more people to do mortgages. Think about it for a second. As a business owner, basic economics says supply and demand. You got a lot of people that want your products. You raise the price because you can't deliver for all of those people. And when fewer people want your products, you lower your price to entice more people to take on your product or to want your product. And that's exactly what the mortgage industry has been dealing with, is rates dropped so fast, so quickly, and they couldn't keep up with demand. And so they didn't drop their interest rates and the margins went up. Well, now if they end up where rates start moving up and things start slowing down a little bit, they're just going to lower their margins to get the machine moving again. So that's a big picture. There is a link down below to a way more thorough explanation of what's going on with rates. So those of you who want to get a little bit more detail, feel free to go there. I want to take a quick minute though, and I want to be super clear about trends. And I'm talking about any kind of a trend that's going on, whether it be a short-term trend or a long-term trend. Many people have the mindset that what's happening today is going to happen forever. It's kind of what we call a fixed mindset that, hey, my current condition can't be changed. There's no impact that I can have to what's happening today. The world, the way that it is today, is the way that it's going to be forever. The truth is the exact opposite. So we get focused on a trend, we get focused on where things are right now, and we think, hey, things are great and they're going to stay great forever. Things are horrible and they're going to stay horrible forever. And that just isn't the case no matter what. So you have to think about things in seasons. I was taught a while ago in coaching that you think about life in the state of storms. You're either in a storm, you're coming out of a storm, or you're about to go into a storm. And that's a trend that you can count on, because that kind of a trend happens over and over again, just like market cycles happen over and over again. Don't get caught flat-footed. Don't get caught with a fixed mindset saying what's happening today is going to stay forever, because whether it's good news or bad news, it's not going to end well for you if you predict that things are never going to change from their current condition. Let me know if you need any help with mortgages. I would love to take great care of you, and have an absolutely wonderful weekend. Bye-bye.